want to talk to you about business loans versus business credit. Specifically, micro lenders though, not just any type of loans. Okay, I'll be stepping in and out like I always do. And as I always say when I start these videos, if it happens to cut off, you can go to my YouTube channel, which is Just Amelia, because I know sometimes when I'm on these different platforms like IG or Facebook, sometimes it doesn't allow me the time that I need to explain this information to you or to get you the money. So what I want you to do is go to my YouTube channel and you can get the rest of the information there. So I'm going to get started. And if it cuts off, that's what the social media platforms do. Here we go. All right, business loans. I am specifically talking about micro lenders specifically because micro lenders have been given money to help the community. They have been given money to help you as a business owner and or someone who wants to start a business. They have been given grant money and they have been given loan money. And those things are at a very, very small interest rate. When we talk about business credit, I'm talking about various business credit. Business credit, it's okay, but it's not like a business loan. Let's compare. A business loan looks at how long you have been in business, when a business credit card looks at your credit score. Big difference, okay? Especially when we're talking about those micro lenders that I favor because they're in communities and they're there to help you. They're going to look at how long you've been in business, if you just started, if you have any business experience. They're going to want to know the details of what you do. Plus, guess what? They're going to help you. And I think that is the most important thing versus a business credit card. Number two, it looks at the equity in your company. Yes, you have equity. Any money that you've invested into your company is equity. If you do not have an accountant and it's not on your balance sheet, then you need to speak with them about that. Or you need to hire an accountant because equity is the capital investment that you have invested into your company. Let's say you've invested $50,000, $100,000. That is actually equity, not sweat equity, money equity. Okay, I'm specific here. Number two, business credit looks at your personal income and looks at the income for your business. Two different things, two different models. Okay. Number three, for business loans, it looks at your personal financial statement. Sometimes, not all the time, but I talked about this before when it came to personal financial statements. I explained in a previous video how you could purchase $250,000, $500,000, $1 million insurance policy, and that is part of who you are. It is part of your net worth. It is part of your equity. As the cash value grows, it grows with you. And you know what? You can write that down as equity. Okay? Know these things. Because most of this stuff that we're talking about is paper. But paper ties back to equity. Paper ties back to monetary, which is money. Paper ties back to cash flow. You can't just create paper out of the thin air and think that it's going to work that way. It does not work that way. We as accountants, we track everything. We connect everything. We pull things together. And that's what banks do. And that's what lenders do. That's what financial institutions do. We pull it together because it has to tie back. And at any time there's a missing piece, we begin to question, what's going on with that? That doesn't look quite right for us, okay? All right. Number three, under business credit, they look at your monthly expenses. Yeah, they want to know how much you're spending a month. But when you're dealing with business loans are not looking at how much you're spending a month. They really sometimes don't even look at how much you're spending a month. That's key, especially when you're dealing with the micro lender. Number four, require you to be a guarantee. Now that's the same as a business credit card. They require you to be a guarantee. You are the guarantee, or that's on both sides, because if anything happens, Who's it going to fall back on? Who can they contact? They can't contact the company. They will do that, but they also need a person. Somebody's running that company. The company is not running itself, and that's the most important thing I want you to understand. You and your company tie together. What you do ties together. Okay, you're not separate, even though we may do separate tax returns. We may do all these things. Remember, you are building your company to look like you, to have the vision that you wanted it to have. So you're an intricate part of that. I need you to understand that. Number 5, lower interest rates under business loans. Oh, definitely lower. When you're dealing with credit, you got higher interest rates, right? That's just how it goes. But business loan, most likely lower interest rate. Number 6, long-term, long payments for business loans. I really love business loans because I could take out amount of money and I'm paying a couple $100 a month because the interest rate is so low. Now, when it comes to a credit card, you have short-term and short-term payments. You got short terms and short-term payments. So they want their money like quick. Give me my money back. When a business loan is totally different. There is longevity, and you want longevity for your company. The biggest thing for me is this, number 7. It builds trust for business loans and you get more money. When you build that trust with that bank or that micro lender, you are going to get more money. For a credit card, you build your credit, you get the same amount of money. Most of the time, they don't even want to increase your credit line. It may take them a while to do that, to increase your credit line. So what you want to do is, I specifically favor the one with the star, which is business loans. I like business loans because it creates trust, creates integrity, gives me more money, lower interest rate, and I'm building relationships with people with my business. Okay, I will see you in the next video. Again, I am going to get you to the money. That is my job, okay? I will see you in more videos. Please click and share these videos so that people can get them. I want people to know this information and get this information because it's valuable. And again, see you later. Bye.